am so excited. Welcome to another episode of Investing in Real Estate. I am your host, Clayton Morris, and we have got a very special guest, an old friend of mine from a number of years ago. I had the chance of, maybe 6-7 years ago, interviewing Robert Shemin for the very first time on my broadcast show, Fox and Friends. We were talking about real estate. And I was familiar with Robert even before that point. I'd read a number of his books, and I'm really thrilled to have Robert on the show today. Robert is a New York Times bestselling author. He does over 100 speeches a year all around the world talking about real estate investing. He's written books like The Secrets of a Millionaire Real Estate Investor, The Secrets of a Millionaire Landlord, a book that changed my life. And today we are going to talk about his strategies for buy and hold investing, the things that he looks for, where he looks around the country, how he got started with buy and hold investing, and we are going to deep dive it all. Robert, welcome to the show.
Great to be here, Clayton. Good to hear from you and be with you again. What a treat.
Oh, the pleasure is all mine, my friend. And so if you are not familiar with Robert, you need to get out there and pick up some of Robert's books immediately. He is a legend in the real estate investing world. And we're going to have links to all of his books and everything in our show notes page. So don't worry about it. You can get access to all of that. Robert, I want to dive into just, how you got started in real estate investing. And I remember there was a story that you told at the beginning of your book, Secrets of a Millionaire Real Estate Investor, that when I read that passage, I ran upstairs and I was like, honey, I want to read this whole chapter to you. Can you give us a little behind the scenes of what that story is and how you kind of got started in real estate investing?
Sure. And I always tell people, and in all seriousness, I had two big advantages over most people when I got into real estate investing. One was I had no money or no credit, which I'll explain in just a minute. And number two, I had no interest in real estate investing. When you're looking for something, you're thinking about it. I was doing some financial planning, and we could only work with individuals that were worth like 10, 15 million plus. Now, I had no money. I couldn't even pay my rent. I'm from Nashville, Tennessee. My rent was like $800. I was always like a month behind. I was brought up, it takes money to make money. Got to be super smart, have degrees, be a doctor, a lawyer, or something. I never graduated high school. And anyway, I met this older couple, and I dedicated my first 4 or 5 books to him, a guy named Ray Binion. And I had no idea what he did. I drove up to his office. He had a beat-up office, hadn't been painted in 20 years. The sign did some home improvement. I got a pickup truck and parking lot with a big dent in it. I'm in the wrong building, wrong company. These people are broke. What am I doing here with this financial planning stuff? And I banged on the door, Clay, and things got worse. This old guy comes. He's like 65, 70. And I'm like, hey, where's the owner? He looked like an underemployed plumber. And he was, I'm it. And I thought I was in the wrong place. And he had no signs of wealth, no signs of sophistication, no computer. Still doesn't have a computer today. And I had talked to him for a few minutes and walked out of his office, and I was driving away. And I believe our life changes in 1 minute when we make a decision. And I, to this day, cannot tell you what happened, but I drove back to his office after driving away a few blocks, banged on his door. And I said, I forgot to fill a little sheet of paper. And I asked, what do you do amongst all this junk for a living? He had broken windows and buckets and broken doors. Some of the rehabbers and landladies and landlords know what I'm talking about. And he said about 20 years ago, he started buying houses by taking over people's loans, fixing them, and selling a few, but mainly renting them. And when I met him in 1993, he had 120 properties paid for, Clayton. He had about $1 million a year coming in net, and he took 6 months vacation a year. And in 1 minute, every concept of money, wealth, and business in my brain just got fried. I'm looking at this guy and his wife going, wait a minute. If they can do this, I got a chance. They told me how they did it without using really much money. And, of course, they stuck with it. And I followed him around for a few months, and he showed me exactly what to do. And within about 14, 15 months, I got 14 duplexes. And I had no money or credit, so he taught me how to use money partners and owner's terms and seller financing. And to this day, that's the model I use. I don't use my own money or credit so much to buy houses. I've done it. There's nothing wrong with it. And he only bought property 20, 30, 40% plus below cash flow, but below market, that cash flowed. And he actually managed them himself. He taught me how to manage property. And that's the model I've used ever since. And he's still in his 90s, and he's still doing the exact same thing. And it's working. So That's kind of how I got started. And, and I always tell people, if he can do it, I can do it. And if I can do it, you can do it. And there's really no limit. How's that for a kind of a beginning in real estate?
Yeah, that's an amazing way to get started in real estate investing. So take me back to those first few duplexes that you were picking up. What was the strategy going forward? I mean, obviously you were dealt an incredible hand there, learning exactly where he was buying properties. What was the formula? I'm sure, did he lay out a strategy, something that you still use today on paper that you're walking around with in your pocket?
Yeah, absolutely. And it's so simple, Clayton. He would only buy property 20-30% below today's market that cash flow like crazy. And he told me something, a few things the first day that really stuck with me, and I follow to this day. Real estate's three numbers. What's the property worth today? Comps, verification with a market professional, days on market, and verify everything. Don't trust the realtor or the seller who's, it's worth, $200,000. Here's some comps. We verify. Number two are repairs. What's the property going to take to get fixed up to, good full value, either to resell or for rental, and you got to know your market. And the third number, the most important, is what will the motivated seller sell it to me for? And the seller's got to be motivated. And then there's the rent. And he told me something the first day that I've come to believe, and people may, disagree with it or not agree with it, but I've talked to people who've had hundreds of thousands of rental units, and I believe it's accurate. Over time, you have a 30 to 50% vacancy and repair rate. Management, repairs, air conditioning. Management's about 8 to 10%. If you're doing it yourself, you got to pay yourself something. Vacancies, 3 to 5% in most markets, and we're at 15%. We haven't even fixed anything. Roofs, carpet, paint, all that stuff. So, I use a 30 to 50% vacancy and repair. Last month we were about 34%. So if the rent's $1,000, I know that over time I'm going to net out about, $600 to $700. And that's what I got to use to pay my debt and make some cash. So the property never cash flows as much as we like, but it does cash flow. And we only buy a property that does cash flow. So if the market goes down, we're still making money. And that's basically the formula I've used. And I've done it with 1 bedrooms, 2 bedrooms, high end, middle end, low end, all over the country, and now in about 6 different countries. And it pretty much works everywhere.
How many doors do you own now?
Over 500 plus some apartment buildings.
Wow.
At one time, I was up to 780 scattered sites, houses, and duplexes.
So does that eclipse your mentor's number of properties?
It does, but he's done some bigger commercial stuff. And I always tell people it's no competition. What's interesting, Clayton, my entire life business plan, and I'm a big believer in, write it down. You need 2 plans. What's my big plan? My big plan was to get 12 duplexes, and I thought it would take me 12 to 15 years. I thought I'd do 1 a year, and then when I'm like 40 or 50, I'd have 12 duplexes throwing off $300, $400, $500, $600 a month. And there it is. There's my cash flow and retirement and my net worth and equity. But what happened was after about a year and a half, I had 14 duplexes, and I was making about $300-$400 net a duplex after paying everybody. And I'm like, wow, I don't have to work anymore. I can't afford to go to work anymore. And then it took off.
So we have a lot of new investors who are just starting, just listening to this show and thinking about diving in for the first time, but they're sitting there, they're thinking about, taking action. They think, wow, this sounds too good to be true. I hear that a lot, right? This sounds too good to be true. If this is so easy, then why isn't everybody doing it? What do you say to those people? Well,
number one, it's like any business. I've never found a business where you just sit back and make money. If you find one, Clayton, please let me know.
Right.
That's legal. It's work, it's effort. And I thought myself, just like the beginners for about 8 months, my mentor told me exactly what to do. Make an offer. Here's what you do. And I was scared to death. I thought, wondered, worried, analyzed, skepticized, negativized. Same thing for about 6-8 months. And then I finally made my first offer. It was on 465658 Forest Ridge Drive in Hermitage, Tennessee. I got off the HUD list, the Housing and Urban Development, and it was worth about $75,000. I got under contract for $41,000. It needed $3,000 repairs. And then the good thing happened, Clayton. I had no money or credit, so like the genius I was, I went down to my bank and I had about $180 in my checking account down at Bank of America. There was a lady I'd banked with for years. And I said, I need to borrow $45,000 to buy this duplex. It's worth about $75 or so. And she typed in my social security number, Clayton, and she said, "You don't exist." I had no credit. My parents taught me never borrow money. Credit cards are evil. Borrowing money's bad. And so then I go back to my mentor and say, "Well, I got a problem. I've got about $180 cash to my name, and I got to come up with 42,000 plus some repairs here in the next 25 days." So he told me to write down 5 successful people I knew. And I said, "Well, none of my friends are successful. I don't really know anybody." And again, just like a beginner, everything that somebody said, I negated. I argued. I debated.
Right, because you knew better, right?
Yeah, and why do I tell people this? Until you've done something, it seems too good to be true. Until you've done it, you can't do it. I always tell people, like, your first day at high school, your first day in college, your first date, your first job. People have done amazing things. And real estate is pretty darn simple once you do it. But you got to get that first deal done. That's the hardest. The second deal is the second hardest. And after about the third, fourth, fifth deal, it gets easier if you follow a system and if you educate yourself, which I respect what you're doing. You're helping people, do it the right way, because there's a lot of people that do it the wrong way. So he made me write down 5 successful people I know. And I'm like, well, I don't know any successful people. He said, well, think about your landlord, your boss, the doctor, your dentist, your hairdresser, the person who owns your car repair place. And he made me write down those 5 people. And I put my deal on a 1-sheet, picture of the duplex. The rent was $450 a side. That's $900 coming in. And if you borrow $45,000 from somebody, a bank or mortgage company, over 20, 30 years, your payment's about $350, $400 with taxes and insurance. $900 coming in, $400 going out. Vacancy and repair, it's going to cash flow. And it's worth more. So what's the risk? I had it under contract, and I went and saw 3 or 4 people that I'd heard about. And my mentor told me something else. He said, when you're raising money, never ask people for money. I go, what? And he said, well, if you ask them for money, hey, Clayton, I need 50 grand from you to do this deal. Their warnings go up. We're not telling the people to be misrepresentative or not, or lie or don't tell the truth. But he said, get 5 super successful business people and ask them for their opinion. Hey, Clayton, I'm investing in some real estate. I found some deals. You're a smart guy. I'd love your opinion. Was this about money? Not necessarily. I'd just like to show you this deal I found and see what you think. You're a very successful business man or woman. First guy I showed it to thought it was an amazing deal. He said, I hate real estate. He gave me some pointers and said, good luck. Second guy went to was very successful. And in 5 minutes, he asked me some questions. He said, listen, I got an idea. That's a great deal. How about I borrow the money, you do all the work, and we split the profits? And at that time, his name was Mr. Miller. I said, great idea, Mr. Miller. So he had what I didn't have. He had great credit and lots of bank loans and bank contacts. And to this day, he and I have done over 100 deals together. He's one of my money partners. Wow. So I basically learned to use other people's credit. And I don't even get half the deal anymore because all they did was use their credit. The lawyer draws up all the papers. You know that when you buy a house, the title lawyer does all the paperwork, just like with a bank. So he's protected. If I don't make a payment, he doesn't get 50% of the deal. He gets the whole deal. I lose it. So what's the risk? If the deal's good, if you know what you're doing. So that's how I literally do 99% of my deals with money partners. Now I can go to the bank now and borrow as much as I want, but I just don't because it takes too much time and it's limiting. I've done it, but I really don't do that. I use almost all money partners and all owners' terms. And that's why I got my first 14 duplexes very quickly. He financed about half of them, and I found a couple other money partners that financed some of them. And then I learned about owner and terms and seller financing. And as you know, everything I teach, I've learned the very hard way. Either my mentor taught it to me, or I learned it by not listening to him and not following some basic rules, like screening the tenants, inspecting every property every month, and really watching the business. So there's no too good to be true. It's effort, it's work, it's activity. And I tell people, if you make no offers, you'll get no deals. If you make a lot of offers, you'll get some deals.
That's great and great advice. And we're going to talk more in the second half. I think we're doing 2 separate episodes here. So Robert's going to be back for a second episode where we're going to focus exclusively on using other people's money and how he constructs deals with owner financing terms and so forth. We're going to dive into those strategies even deeper. So sort of a high level stuff. So the rest of this episode, I'd love to kind of hear what you're looking for and what you buy these days and where you're buying them.
Well, that's the key. As a lot of people know, I hear this every day. I'm right now talking from South Beach, Miami Beach, where I live. And if you line up 100 investors and 100 realtors, 99% or 100 will say there are no deals in Miami Beach. I was just in Southern California. If you line up 100 investors and 100 realtors, most of them are going to say there's no deals in Southern California. Well, we just found a deal here, 2 deals here in South Beach. We found a bunch of deals in Southern California. I have associates doing deals in Southern California. I believe I've done deals in New York City, New Jersey, Ohio, North Carolina, about 10 or 15 different states in about 5-6 countries. Here's the deal. There's always a motivated seller.
Right.
There's always property that will cash flow. Now, it may not be in downtown, Beverly Hills or downtown Manhattan because the numbers don't make sense. But within an hour of pretty much wherever you live, there is a motivated sellers. There are motivated sellers and there are deals. Now, that being said, just like any business, there's harder places to do it and easier places to do it. And I don't know about you, Clayton, I'm kind of lazy. I don't like to work so hard.
Yeah. Oh, I'm right there with you.
So I like to go fish in ponds that other people aren't fishing in and that they're easier to fish in. I don't want to go to the dock where there's 100 fisher people lined up and have my lines tangled up with everybody. So number one, 99% of the deals I do are not on the MLS. We go direct to highly motivated sellers. People with IRS liens, not tax liens or deeds, that's property tax, federal tax. Out-of-state owners, bad landlords, we call for rent ads, eviction court, divorces, a lot of mail. And it's a numbers game. And then I go to markets where the houses are cheaper and the rents are higher. There's a curve. If you buy a $2 million condo in South Beach, it's probably going to rent for, $3, $4, $5, $6, $7 grand a month. You're not going to make a lot of cash flow with the taxes and the insurance and the management fees. But I'm just bought 3 houses in Memphis, Tennessee. They're all the same. They're about $40,000 to $50,000. They rent for $800, $900, $1,000. You borrow $40,000 from somebody. It's in decent areas. They're worth more. They're worth $60,000 or $70,000. And the payment's like $200, $300 a month. And the rent's, $700, $800, $900. That's simple math. In decent areas. Indianapolis, Kansas. I tell people kind of the second or third world of the United States. And no disrespect, because I grew up in Tennessee. I love all these places. The first world is Vegas and New York City and Miami and Los Angeles. The second world are the Atlantas and the Charlottes. And then the third world are the Macon, Georgias, maybe the Memphis, Tennessees. And when no disrespect, just, people all over the world are going, gee, I want to move to Macon, Georgia.
Right. Right. But people live there. And that's what I remind, my clients a lot is that, look, you might not necessarily live there. You might want to live in South Beach. However, there are a lot of people that do, want to live there and have to live there and live there for work. And so
hard-working good people.
Right.
I'm in South Beach. Nobody works except me. They're all loafing around at the clubs.
Right.
Trust fund babies or something. But, Cleveland, Ohio, Detroit, Michigan, the suburbs of Detroit, we've made a fortune in these cities. Indianapolis. And again, I say that, and I just did a cash flow property in South Beach, and I've done a cash flow property in Riverside, California, Southern California, and I've done cash flow properties around New York, within an hour and a half. So it's possible, and there's deals everywhere. And I also buy, fix, and sell, of course, but, buying and holding is the wealth builder. That's what's going to make you wealthy over time if you do it right and can hang in there.
So that's what I want to talk about now. The power of buy and hold investing and why, I do wholesale deals in New Jersey. I don't flip anything here locally, but I own properties right outside of, Detroit, like you said, and Indianapolis and Pennsylvania and all over, and acquire them off market. But the whole game, the whole point was to hold them. I'm not holding them in New Jersey, but holding them where I could get a high ROI. So that is the whole point of this show, is to help other people really wrap their head around buy and hold real estate. Why to you is buy and hold one of the most important investment vehicles in the world?
Well, I think it's real simple, and I like real examples. I don't like theory or seminar talk or book talk. In the last year, I've probably spoken to 50, 100,000 Americans in these different conferences. And I asked people, I said, let's be real. Raise your hand if you've made over 20% return on your money. And my hand goes up. And no hands go up unless they're maybe one currency trader, hedge fund or something. I mean, these are out of, thousands of people. And then I say, who has made more than 10% net real return on your money? No hands go up. Maybe one or two or three that had amazing stock or one mutual fund. Most are making 1% to 4%. And they're not including commissions or all those expenses with the mutual funds and the retirement accounts. And listen, except this year, inflation, 2% to 3%, maybe 4%, doesn't include energy or food. So the real inflation rate over time is usually 8 to 15%. People can verify that. Inflation does not include energy or food, and energy and food usually goes up. So that's why people are feeling poor, and you're seeing all this negativity, I believe. People are going backwards. You're making 3, 4, 5% on your money. Your income's not going up that much. And inflation's 7, 8, 10, 12%. No, over time, it's mathematically, bad. Now, why real estate as opposed to anything else? And I've looked and tried everything, Clayton. I don't know about you. I've tried it all. Mm-hmm. Stocks.
Oh, I've tried. I mean, I've talked about get-rich-quick schemes on this show, and I've
invested in everything: ant farms and stocks and options and currency trading, and it's never ever worked. And it might work for some people, but anyway, real estate. Number one, you can buy it below market. You find a motivated seller or property that needs some work, you can get it 20% below market, almost in any market. I mean, there's always a 5 to 10% fudge factor, a real estate commission 6%. So I'm not a realtor. I mean, right there is 15, 16% below market without even, getting somebody super motivated. If you want to buy a stock that's $100 a share, you're going to pay $100 a share.
Right.
Number two, I can borrow out of it. Listen, thank God the lending criteria has changed. They don't loan 100% anymore like they used to. But you can still borrow 60, 70, 80%, get a regular loan or mortgage. Or my money partners, I borrow money from them, and they get the 60, 70, 80, 90% loan. So I've got no money in it. You can't do that with a stock or a bond or anything else. Number three, if you buy it right and manage it right, and management's the key. You get a bad manager, you can go bankrupt in 2 years. You get a good manager, you can make money, or if you're a good manager. So it cash flows. The tenants are paying off the debt. The next one is you should make cash flow every month, something after all your expenses, and you get all the tax benefits. You have your own business, you get write-offs, you get the depreciation, you get the write-off all the real expenses, of course, check with your own accountant. You can do 1031 exchanges and not pay taxes or defer them forever. You can borrow the money out once you have equity and put it in your pocket, generally tax-free. And over time, what happens to real estate? And I always tell people, I have a chapter in one of my books called 3 Deals and You're Done. If your grandmother would have bought 3 really nice homes 20, 30 years ago, and she had some rough months, and the tenants paid them off, what would that house be worth today? She probably bought it 30 years ago for 40 grand. Now it's worth 800,000 or $1 million or 300,000, and you had 3 of them. And I say it's going to happen again, but most people won't take the time to get the real estate under their belt and stick with it 5, 10 years, where the tenants are paying off your debt and the property is going to go up in value. It doesn't go up every year, but over time it does. And here's one more thing, Clayton. I don't know about you, but I study this stuff way too much. According to Harvard studies, the number one reason real estate's gone up in the last 20 years, not supply and demand, or they're not making more land. That's kind of theory. The real practical reason, when I read this in one of these PhD studies, it blew my mind. The number one reason real estate's gone up in the last 20 years in the USA is government regulation.
What?
Well, think about it. 20, 30, 40 years ago, your grandparents bought some land outside of town. They could build probably whatever they wanted to build, right?
Yeah.
Now they say it's $60,000 to $150,000 of impact fees, zoning, housing, green laws. I mean, in California, it's like $150,000 for each condo unit.
Right.
All the regulation and paperwork. And I don't do politics. Regulation is probably going to go up in the next 10, 20, 30 years. It has in the last 20 or 30. I mean, think about it. 50, 100 years ago, you drove out west, got some land. You could do whatever you wanted with it.
Right.
Now you can't. Highly restricted, highly regulated. Zoning, housing, codes, green laws, all that stuff. And that adds to the cost of real estate.
It is amazing. It is amazing, the power. I hope everyone right now is just paying attention to this, who is thinking about getting into real estate for the first time, listening to the power of rental real estate and what it can do to transform your life. I know it's transformed mine. It's transformed my family. And back when I first met Robert, I had just done like a few flips in Florida, but had never actually bought any buy and hold real estate. That was the next step for me, and everything has changed since then. So Robert, I'm going to twist his arm and have him come back for a second episode of this show. And what we're going to talk about, hopefully in the second episode, we're going to dive into, I want to know how Robert sets up his business. So, LLCs, you talked about that, tax advantages of that. Plus, I want to dive into how he's using other people's money to acquire his rental real estate portfolio, his fortune. Sound like a plan, Robert?
Sounds good to me. I appreciate the invite. It's going to be great.
Awesome. Well, my thanks to Robert for joining us in this episode where we had a chance to deep dive just the general idea of rental real estate and where he's buying properties, how he's doing it. And like I said, join us next time for our next episode with Robert. We're going to deep dive tax structure. We're going to talk about how he acquires properties using other people's money. Everything we talked about in today's episode will be in the show notes page. So just go to morrisinvest.com/podcast. And right there, you can click on Robert's page and you can look at all of the things we were talking about. And you'll have a full rundown. So thanks everyone for checking in on this episode of Investing in Real Estate. I'm Clayton Morris. We'll be back here next time with another episode with our good friend, Robert Shemin. We'll see you, everyone.